at the beginning in 2017, that was the beginning for us. It was just public markets. There were no private markets, so not really a question of what to do. But then in 2018, we started to see the emergence of private markets, of entrepreneurs realizing that VCs are actually helpful, and you need that capital and you need that expertise, and you can't just go do an ICO and think that the public will support you in the same way that a dedicated VC will. But there was very little capital in the venture market at that time. All the way through about 2020, there was basically no capital in for venture. Our first venture fund was $17 million. Right. So given how much we manage today, it's amazing to look back at like that. And that was difficult for us to raise at the time.
Yeah, I was about to say that's not bad considering how bad the market was and how nascent it was.
Yeah, but the amount of doors we had to knock on, and that you do what you need to do in order to make it happen. But at that time, there was a lot more capital in public markets, but it was pretty concentrated in the big names. It was Bitcoin and kind of Ethereum, and that was about it at the time. And then we started to see, some really fantastic venture returns for us and some other venture investors in the space. And so what we have seen since 2020 to now, I would say it's kind of flipped. And there is far more capital on the venture side now than there is on the public market side. In 2021, this was all disguised and didn't really matter because global glut of liquidity, numbers could only go up at that time, right? And everyone was pretty irrational, including us and everyone, right? But now we're seeing that with all of these tokens being launched, all these new projects going public, quote unquote, and there's very little competition in the public markets. There's, a lot of interesting opportunity there. Whereas on the venture side, there's, a lot more capital chasing fewer deals. And one of the most important determinants of returns is how much competition do you have. If you have a ton of competition, your entry valuations won't be great. And then, it's really hard to make exceptional returns.
I was speaking to Richard Galvin from DACM recently, another fund we're invested in, and he raised a really interesting point. He's like, the markets are so skewed now because of the size of the VC, because of 60 billion went in back in 2021, 22, and there's only 10 billion in liquid hedge fund space. He said, so what he's seeing is as tokens come onto the market, because there's a future unlock of, whether people unlock them or not, the market tries to discount it. So you tend to get these massive drawdowns, allowing the liquid guys to get into really good projects at really quite significant discounts these days. And so he said, that overhang has actually created great dynamics if you're brave enough in the early stage of a token coming to market when it plummets in price.
Yeah. That's absolutely the case. You have to know what you're doing, right? You have to truly understand what is it that you're buying. Who else is there around the table with you? What are their motivations? Right? Like there's a whole variety of people in the industry, and I think it's important to choose who you're in business with. And I think the market does overreact to things like token unlocks. And that irrationality presents a buying opportunity.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.